Can you speak about that list of deficiencies that might be indicators of material weaknesses, John? It reminds me of the guidance that you've given us on past programs about fraud risk and about internal control risk. Are these related concepts?
Well, it's a little bit different. The list that was in SAS 112 for significant deficiencies and material weaknesses has either been eliminated or modified. And that was done, I think, based on the actual experiences firms were having in struggling with what kinds of information should they be including in these reports. And in order to sort of condense the guidance and make it a bit more simpler, the SAS 115 standard adds indicators as to when a circumstance may be a material weakness. Those indicators include circumstances where fraud may have been discovered, include where you had to go back and restate previously issued financial statements, include where there has been a material misstatement identified in the current year's financial statements, or sort of a general phrase, there's ineffective oversight by those in charge of governance over the internal control system. Those are the four indicators of a material weakness. And again, that helps the auditor with making a judgment call that would be appropriate under the circumstances, rather than having the auditor be forced to make comments simply because they're seen as a descriptive item in the prior standard, SAS 112 comment, SAS 112 standard. Now the auditor can look and say, is this going to have a material issue? Can it grow to a material issue? As opposed to simply looking at a list of items.